Hello, my name is Eric Parnell, Chief Market Strategist of Great Valley Advisor Group, and I'm here today to talk to you about a more serious topic that's the impact of war on financial markets. Now, the political and humanitarian impact of war cannot be overstated, and that includes the current crisis with Israel and Hamas. But when it comes to financial markets, we see a much different reaction than we might otherwise expect, and history provides us an important guide of what we should reasonably expect going forward. Now, when markets reopened on October 9, they initially fell as would be expected. After all, it's an uncertain event and markets dislike uncertainty. But after bottoming in the morning, U.S. stocks rallied through the remainder of the day and continued to trade meaningfully higher than they did following the immediate outbreak of the war. Although it seems as though the outbreak of war should cause trauma across financial markets, the reality of it is that markets actually hold up reasonably well during periods of geopolitical uncertainty, and in many cases will actually prove to perform well in the wake of these types of incidents. History provides us an important guide to evaluate this point. We'll begin by taking a look at World War II. The Japanese attacked Pearl Harbor on December 7, 1941. And the stock market fell for the months that followed by as much as 17%. But it's important to remember the context. The United States was in the midst of the Great Depression, and the outcome of the war would remain uncertain for the years that followed. But despite that uncertainty, the U.S. stock market bottomed in April of 1942 and continued to rally once it bottomed through the duration of the war. The second historical example is related to the Cuban Missile Crisis in October 1962. Markets initially fell by 7% in the initial days of the crisis. But once the situation was resolved, markets rallied to new highs in November of 1962 and continued to rally through the remainder of the year. The third example that we'll consider is arguably the most profound, which was the terrorist attacks of September 11, 2001. Now, the U.S. stock market was closed for a week after those attacks. And when markets initially opened, they fell by 8% on the first trading day and fell by as much as 15% in the days that followed. But once the situation had stabilized, markets quickly rallied. And by October 2001, they had recovered all of their downside. And by December of 2001, they were higher by as much as 3%. So while the political and humanitarian impact of war is profound, it's also important to remember that on financial markets, the impact tends to be muted. And in many cases, markets will tend to perform well during these periods of political uncertainty. History has confirmed that, and we're likely to continue to see that going forward. Thank you for joining me for this latest market insight, and I look forward to seeing you again soon.